This is Martin from Secrets, the channel for learning about trading and investing. Welcome to a quick market wrap up for the price action that happened today on Friday, 28th January 2022. So we will have a detailed analysis based on the weekly market review that's going to come on Sunday. Right. Before that, what is the price action? Let's quickly go through the different elements of analysis and then wrap up on a small view, a quick small view, right? Price action, you can see that it looks almost like an inverted hammer. Inverted hammer sometimes indicates reverse in the ongoing trend. The ongoing trend in the short term, you can see it was up. So probably that may indicate that it's a downward, or so, but it's not a good hammer to say, and a good hammer to a small wick. So anyway, this definitely is a bull trap, right? People are going long, market went, the price went above previous day's candle, much above that, and then shoot it up and then give away things. So the size of the wick indicates clear pressure from sellers, right? And similarly, the bank nifty, right, what you see is again a bull trap, right? It trapped all the bulls by taking the price to such huge level and then sudden selling. A big sell-off happened by the Fyers, or institutions, basically from today. I don't know who did that. Mostly it is institutions who sold 6,000 yesterday, day before yesterday 7,000 crores. Today might have sold definitely much more than that, or somewhere in that range of selling might have happened, right? So that's exactly the price action. The bull trap, with an inverted hammer, and this is a wide range bearish candle. Two bearish candles, and basically Nifty closed 8 points down after making huge up moves almost to the 17 400 kind of levels where it met the resistance and then gave up everything. And Bank Nifty was not that strong, right? It ended up losing 300 points nearly, and that's the price action. This is what happened, right? Big gap up Nifty and Bank Nifty, and then an M pattern, and then the neckline was broken and the huge fall. Same pattern, except that bullishness was not seen initially in the Bank Nifty, but it formed a M pattern and then broke down huge in the afternoon. Momentum. There was a bullish divergence, and it almost worked in the morning and met the targets also. And then the price met with the resistance. That's on the Nifty. Bank Nifty, the momentum is sideways, and this bend from near the the bullish zones indicates that there is clear pressure from the sellers. Huge selling brought down the momentum. Supports Nifty 17,000 Fibonacci 38 is a support that you would watch out for. 17,400 is the resistance on the upside. Bank Nifty 38,500 would be the actually it's the other way. There is a different this is support and this is resistance. So 38,500 is the resistance. 37,000 Fibonacci 23 is the support level that you have to watch for, right? Volatility was almost flat, but a slight cool off of 2% happened today. And implied volatile. So if you look at the Bollinger Bands trade reach volatility, you can see that it is a high volatile because of the distance from the median to the bands. So Bank Nifty also, this volatility contraction is happening in the Bank Nifty. The skews is happening, but here it is Nifty. The skews is not happening. That means big moves can be expected, but it is range bound because the bands are going straight, not up. Right? So volatility with huge consolidation is what the bands are indicating. And IB 21.8 and Bank Nifty 28.3 and 2%, 2.5% or more, and then 3% cool off contraction is what happened. Alright. So IVP is 83 and 71 for Nifty and Bank Nifty. Sectorial watch if you see metals and auto continue to be much better on the short-term momentum sideways because it's not bearish early, but IT, pharma, FMCG, reality, all of this continue to be the bearish ones. Now what to expect for the next day? High volatility can be expected because next trading day is the last trading for the month before the budget. So that's on February, right? So there can be high volatility. Resistance can be there at the 50 DMA levels of the Nifty, right? Which is where exactly it faced resistance at that level. So 50 DMA, watch out for that level. Banking index is more bullish, obviously. Today also, it formed a very bearish candle, but today looks slightly weak. But overall, banking index, you see the trend momentum and all that. It seems to be much better than Nifty. So big moves may not happen on Monday. Either upside or downside, it will not happen. It will happen after the event. After the event is like after the the federal budget, the our budget, union budget is done. Only then it will happen. So Friday it may be mostly consolidation, but it will be hugely volatile. Right, which resistance is clearly seen at 20 DMA, 100 DMA, and 50 DMA. So 50 the first one. Right, so banking gives them hope, but considering today's price action, there is worry. And if an institution buying selling will happen today is also huge. After such big up moves, big selling happens suddenly all of a sudden reversal. So that same kind of action can be expected on the day also. That's view. Hope it helps you to frame your view for the next day. So if you already go shoots up beyond 20, the better to stay away, and watch the game or play with the pure hedge positions with defined and acceptable risk in your. It's better to stay away until the clarity comes in after the budget. Right? If you're intraday player with stop losses, if you're able to judge the directional trends, then you can take a risk defined approach also. So that's a wrap up. Hope it helps you to frame your view. Thanks for watching. Share it with your friends and subscribe if you know that. So thanks a lot. Bye.